Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 8:18 p.m. Eastern Standard Time on a pretty heavy, snowy evening, at least for us here in the New York, New Jersey area. Um, Today is April 21st. I'm losing track of time as usual. I thought next week was April 1st. So that's what happens, when you live and breathe trading. Um, full disclosure: this session is purely for financial education, not for any solicitation or advice. Very importantly, as I like to remind everybody, this free webinar will be uploaded to the Clueless Day Trading YouTube channel. I'd like to spread the word around for anyone who's out there who wants to learn a little bit about the markets, about the realities of what goes on, the real reasons behind it, and how to benefit from it and take advantage of it. Please spread the word to go and check the videos out on Clueless Day Trading YouTube channel. It's free to subscribe, and all they have to do is put their email and just click on it, and Google will take care of the rest. So, tonight's topic is we're going to go through, I think it's going to be extremely helpful today, because what we're going to do is, other than my broad points that I normally make about the markets and such, about trading psychology and things like that, we're going to go through all the intraday charts that are that I published, because that's going to kind of give you, I think what happened today was a absolute clear-cut example of extreme volatility, which is what we deal with every day. But today, being the FOMC, Federal Open Market Committee, Federal Reserve meeting, it was enhanced. And that's really going to help everybody understand that. And the more we understand this type of volatility, the better off we are in dealing with what we deal with every single day. So, on that note, give me 2 seconds here. Trying to get my good friend here in, Jay Fox. He's having some issues with signing in. I just gave him an idea. Okay. Didn't want to disrupt all of you guys, attending, this late. So one of the best articles, let me start off by doing this. One of the best articles that I read recently, and I do read this gentleman, and his name is Brett Steenberger, and you can basically Google him, and he writes for Forbes, and he's basically a trading psychologist. And I think all of us, and I certainly do, need to get not just my silly clueless trading motivation, not silly, but still, need to really recalibrate ourselves in what we do, because the mental part of trading is what really drives the confidence, which allows us to see things more clearly with the help of all the tactical charts published and everything, to do what is needed and adapt to situations as they're unfolding. Okay, which is the second topic that I'm going to cover, which is going to be the main topic, which is volatility. Because volatility in itself, the essence of it, as I've mentioned so many times, and I truly believe it, is there to create confusion. One of my neighbors is with, I believe, J.P. Morgan on Wall Street, and he's a very smart guy. He's a credit guy, so he works on the bond side, and they love volatility. And he's on the bond, and I think part of it on the equity side. So they love this complete confusion and this massive movements in the market, up 250 points, down 100, ending the day down, down 44, in the middle, in between, like back and forth. They love it because that's where they make the money. So these big institutions on Wall Street, and this is the way, it's the nature of the business. We're not here to, change it. That's just the way it is. It's just like life. Life is not simple. There's a lot of volatility, and we got to deal with it. So they love volatility. So, like I've said in my previous webinar, they create this volatility, and then they look for, and there's always reasons to create volatility. They didn't like the cologne Mr. Jerome Powell was wearing. They didn't like his face. They didn't like the way he shaved this morning. I mean, they'll find anything. Okay. And they'll use that to create the massive movements back and forth. So my job at Clueless 8 Trading, as I have done very successfully all the way through good, bad, and ugly markets, is to show the levels where markets can go, where they'll hit a wall or a roadblock, um, and and then and what you need to do in order to manage your trade. So the key thing is that the movements are so fast. Well, let me hold that topic for a minute. So let me just go through this article. I think it was so powerful. I read it late last night. Okay. And it says, do you have what it takes to successfully trade financial markets? Look, I try very hard every single day to improve myself, to help you guys improve yourselves. And because I live in the world of charts, I try to keep my emotions as much to the side as possible. Okay, I know it's not easy for other people to do, but I live and breathe charts. I live and breathe those candles that move, and I am not that fast a trader that I can trade within a 1 nanosecond. Jay Fox is in. Great. Uh, Jay Fox, can you hear us?
Yeah, hey man, sorry, technical difficulties.
Apologies are never needed. It's great hearing your voice. By the way, guys, Jay Fox is a terrific guy, and I'm so glad he's been very busy lately, and I'm glad that he's in today. So that's great. And so is my good friend Dano and Al, who just walked in. Great new member. So, wow, we have a great crowd here tonight. I love it. I love it. So anyway, so when I read this article, it kind of hit a couple of nerves, and I just want to share it with you. That's all, because I think these things help us recalibrate our brain, and and just like anything else in life, motivation is brain exercise, just the way going to the gym is physical exercise, right? So trading motivation you know, is mental exercise. I'm not quite sure why they have a stock photo, a Shutterstock photo of a 12-year-old girl, trading Tesla. I'm not sure about that. Okay, I'm just kidding. But she does look very young, and she's trading. So, wow, good for her. All right. So one of a couple of the things in here that I want to highlight. So I'm going to get a highlighter. Um, and do read this article, which I, requested everyone to do so. And I printed it out. I actually pasted it in next to my trading desk. Is that it says here there are traders who merely. His first observation is that, and this is from interviewing a huge number of professional traders. So you're not talking about mom and pop sitting there trying to buy, 5 shares of Facebook. So these are professional feedback from professional traders. So one of the first observations that he makes is the fact that the traders who merely happen to catch one large market move, which, like they say, every blind squirrel can get a nut or something, whatever they say, right? You can get lucky anytime. That's not trading. Trading is a consistent type of business where you're going to lose a bunch and you're going to make a lot more. You're going to lose a little, you're going to make a lot more, and you're going to keep going. So it says one large move, or rather the ones who have sustained high risk adjusted and absolute returns over extended periods. That's the key here. Because there's a term in trading, in the financial markets, called hyperbolic discounting. You guys can Google that. It basically means that what we see in front of us, what is happening right now, is far more important to us than what will happen down the road. Now, in options trading, it's the same story. What is happening during the day is far more important to us as options traders, because things happen in speed, than what is going to happen a week from now, 2 weeks from now, a month from now. So hyperbolic discounting in my simple brain means everyone is short-sighted. Not being short the market, I mean short-sighted. We're just looking what's happening in the next hour, within the next 4 hours. and missing the bigger point where a stock is going. I can draw multiple cases on that, and we can look at a bunch of charts on that. Look at Chipotle. We've been long the stock since 270 or so. Thing is that, Thing went to almost 340 at 335 right now in the middle of this crazy market. Multiple swing trades are like that. So hyperbolic discounting, which is not mentioned here, is basically where we lose track of the amount of money we can make by being extremely nervous, confused, and being a monkey on a hot tin roof, known as MOHTR, a term that I coined years ago, and or SOA, sitting on your, I'm not going to say that, and doing nothing, because the perfect moments come and go. And because of the advent of these very high frequency trading algorithmic high frequency trading computers, they happen rather quickly. 300 points up, pull back, 300 points down, 400 points up. So they create massive confusion. So I understand that because I live it every day. And I have to explain to you, all of you guys, every day, all through the day. Which brings me to one other point before we go through this quick article. I'll make this quick. Is that my real-time Twitter feed, if you really took the time to look at it, is a running commentary on what is happening with the markets. It will teach you more about the markets than you guys on your own will ever learn in years. And it's a fact. And it's visual with the comments. So it's a huge resource for a lot of you to understand the dynamics of what really happens and why they happen. And I think down the road, you guys will look back and say, wow, not only did I learn so much, I actually did well by not being that quick on the trigger, or being quick on the trigger, taking some very fat profits on short-term trades. And this gentleman talks about the fact that you have to be both short and long-term. And I really liked it. And this is coming from a guy who is a serious trading psychologist. So let's get into this right now. Very, very important. The traders who, one large part, rather the ones who sustain high risk adjusted and absolute returns over extended periods of time. Hedge fund managers with decades of consistent positive returns. Other are day traders who place many trades per day and sustain meaningful profitability year and year, even after transaction expenses. Let me just point out one thing. Day trading is only great for people who have the luxury of staring at multiple screens. Okay? So if you have a full-time job and you are looking at some of these fast day trades that we do, then the only way you can get around it is you got to not, first of all, get into it too hard. In other words, you don't want to put too much money in. And number two, you got to put some sell orders out there so that if it hits, you are going to get sold out. Case in point, Bank of America, BAC lottos. Those lottos today, the 32 calls expiring tomorrow. I'm sorry, not tomorrow. See, I told you I lost track of time. Friday were as low. They were at 29 cents yesterday. They were as low as 15 cents today. 15 cents at some part of the day. Let's call it 20 cents. And they went to 54 cents. Guys, do the math. That's like a $20 option going to 54. Or a $2 option going to $5.40. These are big numbers. These are big numbers. They're 200+% type of numbers. Okay? So in those type of day trading type of situations, you got to basically, and if you're going to buy a lump of them, anyone can buy 20-cent calls. Come on. Okay? Depending on the size you buy is how much money you're going to make. If you buy 100 calls at 20 cents, that's $2,000. If you don't sell them at 50 cents, forget 54 cents, you're taking out $5,000 just on one trade. Okay? So it all depends on the money that you put in. So day trading wise, the thing that I want to basically share with everybody, because my service is about just talking straight. We're not in the business of fluffing up things here, because there's enough 300, 400, 200% type of options returns. But how many times do you see when you enter my website splashed out on your face screaming at that? I don't believe in that. Got to be in my service so you know what's going on. Other services, you walk into the website, their landing page, and the first thing you see, I just made 900% on this in 2 months. We've done 900% in 2 days in some cases. So anyway, that's a different topic. So the first observation is that traders who don't just look for one large market move, but the ones who are sustained, they do sustained high risk adjusted absolute returns. What is sustained high risk adjusted? Options trading, for a better choice of words. Okay. Second observation is highly successful traders are a very small proportion of the trading professional trading pool. Simple English. Very few make real money in the markets being traders. Very few. That's just the nature of any business. And this is exactly what this gentleman talks about. I've talked about it before. Very few of you, and I hope all of you, but just like any other profession, any other sport, are going to be the top 2% or the top 5%, just like in high school, just like in middle school, just like in college. To get an A plus on a very tough class, let's call it, statistical management or something, or medical ethics or something like that, like a high level class. It's very few of you are going to, very few students get an A or an A plus. Most of them will get a B, and that's fine. But very few of you are going to get up there. And the only way you can get up there, and this is what I strive for every single frigging day, is to be in that A plus range. But it doesn't come easy. So this is what this gentleman talks about, okay? That a very small proportion will make it up there. And that is sobering. That's in simple English means that sucks. Like, why can't everyone just make a lot of money? But the professional trading universe is a very small proportion of a total number of people who try their hand at trading financial markets. Okay? I don't have no idea who Brad Barber is, but if you click it, I'm sure you're going to get there. Investigated returns from traders in Taiwan. And these guys are real gamblers, by the way. Taiwan, Japan, and China, these guys trade the markets like nuts. Just the way they play the casinos in Wynn Macau and other places like crazy. They found that more than 8 or 10 participants lost money in a typical 6-month period. Just like traders. So great majority of active traders are not able to make money. Now, the way I look at it is if you are an emotional trader and you're just trading off prices, and I've said this 100 times, but that's a fact, then you have a chance to be those 8 out of the 10. Emotions have a lot to do with things, right? Everyone has to deal with emotions. I do. But if you are trading off tactical charts that I'm producing and delivering every single day, constructing in the middle of extremely volatile markets on a real-time basis, and you understand, like I said today, 70% of the messaging that's coming out of it, you're in pretty good shape. It doesn't mean your PLLs, your profit and loss statement every day is going to be like beautifully green, but you will take down some very sweet profits. You will do a nice setup, and then 2 days from now, a week from now, 3 days from now, I'm not talking months from now, because everything that we're doing is within a matter of days or a matter of hours, because no one here seems to have the patience to sit around for 2 weeks. It's like a stock doesn't work in 5 hours. They're like, oh, am I selling it? What's going on here? So look into yourself and ask yourself, are you really trading these charts the way it should be? Because the reality is that if you do it, you will be Not the 8 out of the 10 who are consistently losing money, but you will be 8 out of the 10 making money. And this market is purely, completely dominated by machines. And I don't need to tell you guys that because many of you are learning it fast. And basically, this is the final word, like he says. Dr. Steenbarger says that trading is no different from any of the performance activities in his dynamics of success. I love this saying. Many are called, few are chosen. Everybody wants to be a trader. They all want to make fast money. They all want to make it rich fast. It doesn't work like that. Trading wealth creation takes time, and you will take big lumps along the way. But if you keep on emotionally trading the markets and just looking at the market as a function of price of a stock, you're not going to get anywhere. The more you focus on the visual picture, what we're going to get into next, what we do all the time, the better off you will be. And believe me when I tell you, I ain't no Dr. Steenbarger, okay? This man is brilliant. Read his stuff. Read his stuff. Okay? So it's true with respect to professional athletes, same way. How many athletes reach the top rung making 20 million a year, 50 million a year? So the final word makes performance success elite. Be in the elite, the top 1%. The top 1%. You know, in politics they say, oh, what was the term? In politics, it's always used as a derogatory term. The top 1%. You know, yeah, they got there. Well, most of them got there because they worked really hard and they knew what they were doing. All the tech guys making frigging $1 billion a year didn't get there by sitting on their butts. Elon Musk didn't get there doing what he's doing and he lived in a little room with no bathroom at one point when he came from South Africa. And that's what makes America great. That makes the world great. So read this article, print it out, put it out there because this is fantastic. And this is a gentleman, Dr. Brett Steenbarger. And I actually found him on StockTwits many years ago. And I read his stuff. And he writes at Forbes. And he's brilliant. That's it. All right. Now we're going to get into charts. And before that, let me just mention a couple of things. Futures are up roughly about 4 points. We know it doesn't mean anything at this point of the day. Here's a couple of things that's going on. Like I said, my service is a ultimate educational service with precision alerts to make you guys money. Does anyone remember? And don't take it, just feel free to answer. One of the posts that I said, the 3 reasons that's worrying the markets right now. I mentioned this afternoon. I said it was 5 hours ago. It was at posted at 3:28 p.m. right, during the heavy volatility late afternoon, and it says market alert: financial markets awaiting 3 major catalysts. Number 1, the U.S. spending bill. Number 2, the Trump trade tariff announcement. Number 3, the Bank of England rate decision tomorrow pre-market. Did anyone quickly glance at that or even remember that I put it? Well, no, just answer. No one's going to pick on you.
Yeah.
Yes.
You guys actually did? That's awesome. I mean, that's great. All right, cool. So basically the volatility today is number 1. The whole reason for the volatility is complete manipulation. Okay? The big banks, the big investment banks decided, okay, we're going to run the market up to 250 points. Somebody who's not following say trading charts will have no idea what they're doing, so we're going to slam him. We're going to slam him. We're going to scare the daylights out of them. throw everybody out, and they want to take the market up. That's exactly what they're going to do. Now, is this the first time that's happened? No. Is it faster and quicker? Yes. Because everything the Chairman Powell did today was perfect. He's a thorough gentleman. He's one of the best Trump appointees that I've seen. He's not like those, scumbags like Bannon and stuff. Personal opinion. I'm just saying. It's who come and go. This guy's a real guy, and he did the perfect thing. He spoke well. He explained. He's going to follow what he thinks is right. Raise rates, quarter of a percentage points. Banks rallied, and then boom, all kinds of stuff. Now, is it anything to do with the Fed? Nothing. Number one reason why the markets were this volatile, and you're looking at the markets, by the way, since last Thursday. This is the market. This is the market since the 14th. What day was the 14th? Last Wednesday. Wow, 1 week. 1 week. And this is where we are. And we have traded this market ferociously. We have traded this market with precision. This is where the market hit. This is where the market went. This is the market right now, which reaches up about 3.5 points. So there's nothing that Mr. Powell did. It is these other things that are being used, just so you know, as excuses. These are the things that are being used as excuses to create volatility. It is not your fault as retail traders as to why this volatility is happening. What is your fault is if you're not following the charts, and we get a 250 point drop, a move, and the lines are drawn on every chart that's where the first line of selling will come in, and you did not take profits. That's your fault. That's your fault. When a Bank of America lotto, and just giving you one example, goes up 200% plus, and you're not taking profits, that's your fault. Your fault is not volatility. Volatility is created to completely mush your brains. But these structures that I put across, called tactical charts, can keep your brain in place. So they use these reasons to basically say, okay, we're going to create volatility. We're going to give CNBC a reason to read off his script and say, oh, this is the reason why they did that, blah, blah, blah. So let's move on. So going forward, we're going to look at charts. And we are going to, let's assume that we know nothing that is going on out there. And we're just following charts, which is really hard to do. But hey, let's do that. So here we are. This is a chart from last Wednesday, 1 week. So let me draw a downtrend line. And remember, these charts control every single stock that you're trading. Pretty much every single stock. Some stocks don't really care about what the markets are doing, like Chipotle or Ulta when it's moving like a nut, or certain stocks, which don't really care about it. The overall market, some of the biotechs, they don't really care, if there's a rate rise or not. But I'm talking of the overall high beta, fast moving momentum stocks. They will all be subject to the movements on the E-minis, known as the ES, that I post throughout the day. So look what happened. So here was the remember, on technical analysis, you always look for a reference stop. So the reference stop was last Wednesday at around 27.83 on the E-minis. Okay. then you better get used to understanding these ES charts. They're easy to understand. Just look at it visually, because I'm a visual trader. The numbers really don't matter. It's a visual way of how you look at it. So here's your downtrend line from all the way up here. Guess what the market did? It hit that downtrend line and decided to go down. Not magic. It's happened like pretty much all the time. It could have busted a move higher, in which case we would have gone up to 2766, where the market is going. That's another 40 some points from here, which is another 240 points from here. The market, in my opinion, looking at multiple charts, we're going to go through a bunch of them. They're all my Twitter feed, but we're still going to revisit them, is destined to go there and complete this pattern symmetry. This pattern symmetry. Along the way, it might do this. So what? Need to be prepared for that. Along the way, let me draw this right. This is the range it's traveling in. Whoa, hold on. It's tough to draw things with a Logitech mouse. This is your trading range. It busted a move well above the trading range, hit the downtrend line, busted a big move within the trading range, and right now it's here. The two scenarios. It's really quite simple, and we have to be prepared for this because we are right now at around 2722. If we fall to 2700, and everything I talked about in my last webinar, I didn't like it the way it happened, but it happened that way and went a little bit overboard. But if we lose 22 points here, that's another, what, 120, 130 Dow points? You don't have to freak out about it. You need to position yourselves at those levels. Now, there are other factors that might affect the market. I'm always there to do my predictive analysis and let you guys know if Trump's tariffs go hog wild tomorrow, which, by the way, does anyone remember that I had a breaking news on the Trump tariff and one of the things they're going to exclude? They're not going to restrict. Does anyone remember that? Because that was very, very important.
Yeah, was that the tech investment?
China.
You guys are just talking like, you know, the broken English to me. I mean, China what? You're on the right track, Nick. China what? Why don't you guys try to complete a full sentence? Go ahead.
Investment from Chinese tech firms.
How about completing a full sentence? Investment from Chinese tech firms what?
Excluding from the tariffs.
Thank you. If you're giving a presentation or proposal for one of your projects with half sentences, I think you'd be let go like within 2 minutes, Jay Fox.
All right, I got it.
No, yeah, I know. I'm just kidding. But seriously, you're right. I know you guys were right. You just finished the sentence. That's all. You know, it's like a Brooklyn gangster saying, I'm going to what? Love you, or I'm going to shoot you through the head. You know what I'm saying? So it's, you know, as New Yorkers, you got to finish the sentence. Otherwise, you don't know whether you're going to live or die. So yes, you're dead right. And so is Nick, because Nick, you know, you guys saw it. That's a big thing. China is guilty of one of the biggest things in the world. Intellectual property theft. Alibaba and all these companies, they won't admit it. They're very smart people. Of course they're smart people. We all have friends who are originally from China, or I have good friends who are from China. Brilliant people. The kid who tutored my son in senior year in high school, junior year in high school, because some was a very tough high school, because everything was AP, advanced placements, on physics B or something. And I'm pretty good at physics too, but believe me, not that stuff. Kid was brilliant. He's working at Morgan Stanley now with a $170,000 job plus bonus. And he sat with my kid for an hour a week, and he just taught him, like, brilliant people. That's what life is. So Point is, but intellectual theft is wrong. You're taking patent technology from Chinese American companies who are in China, and you're making, you're copying it and you're doing this. So that's fine. But you can't block global M&A. That's a big thing. And the market actually reacted very positively right after that came out. So his intellectual patent is going to be hard hit. And China's already saying, okay, dude, relax. We're not going to bother. We're not going to go ahead and tell every single tech company and trying to enter China to show them all the inner secrets of why the technology works and stuff like that. So New York Times is right now breaking. I'm looking on my thing here. President Trump will hit. I hope the market takes this well. Yeah, I think it should be fine. It says President Trump will hit China with at least 50 billion in tariffs and penalties for the theft of trade secrets that cost the US billions. Now, prorating what it cost the US might not be a very good idea. Let's see. It's just breaking news right now. Okay? We'll see how the market reacts to that. So that is one thing that worries the markets. You can't be sending them a bill saying, "Oh, you took this technology, so I want $1 billion for that." Even the tech companies they stole from saying, "Hey, relax. You can't go that far. We can protect our intellectual property going forward, but you can't backdate everything." Do you guys understand what I'm saying? So that's like you can't be doing a clawback. It doesn't work like that in business. Anyway, so let's look at the charts here. So it hit that downtrend line perfectly, and it pulled back. And now we're back in this trading range. Now these moves are big. These moves are 3 plus, from 2710 to 2740. From 2710 to 2740, you're talking 200 points, right? 200 more points. And it's happening very, very quickly. So unfortunately, I wish I could make this very simple, but I don't control the markets. I'm just showing you what markets can do. So if you're trading some of these fast-moving stocks, or the SPX, for example, which was just phenomenal. The ones expiring, the March 23s, you guys saw that, posted it a couple of times. The March 23, 2760 calls yesterday morning were 70. Yesterday closed at about 60, 70 cents, opened at 25 cents. Went down to about 20 cents and went to $1.62. Guys, that's 700%. Well, I'm looking at it from the bottom up. But what about 400%? I mean, these are lottos. Gotta do it. Unless you do it, doesn't matter how many times I tell you or how many times these things are shown, you're not gonna do it. So, and they are fast. Like I said, those are day trading options, but that was more of a swing trade because we are buying them for days now. The fact is, you got to be quick. If you're not in front of the computer, you got to put out some sort of sell order out there. Limit sell, like you want to sell it at 50 cents or 60 cents or $1. You got to throw it out there. They'll take it from you because when these spikes are happening, they're happening rather quickly. So this is where we are right now. Okay, this is the range, which is 2730, 2710. That's 20 points. 20 points is roughly 120 Dow points, right? 120 Dow points. That's it. We break this, there's a good chance we're going to revisit down here, which is There you go. 27.97. This is 27.12. So 12 and 3 is 15. So 15 times 6 is around, this is another 90 points. So you got a 120 point level that either we break out, again we hit that downtrend line, we got to take that out, or we drop another 90 points on whatever the tariff crap is coming out, and we better hold this level. Once we break this level, that's another day story. I'll put out the real-time charts to see where we can go. Some of my longer-term charts have already shown that. Now, the other thing that happened here, can anyone see? Because this is the most important part of being a tactical trader. If you guys are understanding what I am showing. So let me clear out this picture here. Where is the other, aside from the downtrend line, what else happened there where the market was inevitably going to hit a brick wall? Somebody step up and tell me. You're looking at it, guys. It was almost a given on multiple charts of mine that we were going to basically sell off at that point. Not to the degree that I thought that it happened, but that was going to be a point where the market was going to hit a wall. Why?
The breakdown level.
Exactly. And what was who was that? Nia?
Sue?
Hi, Sue. And you see the breakdown level right here, right?
Yeah.
Exactly. Not that hard. Real simple, guys. It's all watching visuals. And that breakdown level, thank you for answering, that breakdown level was Monday. That's the level. That's known as what, guys? What do we call these breakdown levels? What you know, and the levels where they come in and buy really hard?
Support and resistance.
Resistance, also known as supply zones, right? The supply point. This is demand, simple English, demand to buy, supply to sell. That's how it's done in technical analysis. There is supply to sell here. There's stocks to sell here. In simple human terms, the reason why it's called resistance and supply zones is because that's the level where people basically lost a lot of money. So when they got back there, they said, that's it. I'm almost break even. I'm break even right now. Let me get out and then rethink what I need to do. That's the real human reason behind resistances and supports. So right here is support, because this is where the shorts said, you know what, the shorts covered again here. Absolutely correct. So downtrend line and this, it's almost a given. Now the pattern, the way it is right now, do not be surprised tomorrow if we retest the 2700 level, 2797. That's roughly another 90 to 100 points. Okay? Do not be surprised, because the less surprised we are, the better off we can react to situations. Yes or no? Right?
Yes.
If we're in the middle of a you know, like in the I don't know, whatever, of touch football, whatever, and you know somebody's going to just whack you from the back, you're not surprised because you're already expecting it. So markets are about a game, and trading is a game of expectations. So do not be surprised if that happens. And that creates a viable, tradable low. Or this level holds and we want to move from here, but once it gets back to these levels again, and it doesn't matter what stocks you're trading, I will immediately, tweet out on a real-time basis like I always do. But at that point, you will have to basically take down whatever decent profits you have on certain things. So that's it. So that's one chart. Now, let's look at the So this is your trading chart. This is a 5-minute, by the way, on Thinkorswim. This is a 5-minute chart, and this goes back to 1 week. So for the bulls, this is what needs to happen. We need to bust a move real fast. Futures are up 5 right now. We need to, first of all, bust a move over the immediate trading range here, 2730, and we need to take this out on powerful volume and fill in the banks. Sue will probably know the answer. What else do we need to see in the form of a candle? We need to see a big, fat, bullish green candle. Got it? So once we get that, you can buy at will all the way up to 2766, which is a major resistance and supply zone, because that's where the real selling started. Got it? But that's a very decent amount of money. From 2740 to 2766 is another 130 points. 130 Dow points. What I'm getting at, which all of you understand, markets are very methodically mathematical because the machines are running it. And my charts are clearly showing what those levels are. So react accordingly. Doesn't mean you have to be a day trader, but when I'm tweeting out, it takes 1 second to check it on your iPhone, your iPad, wherever you are. And then if you have any fast moving stocks like the Googles or the Facebook is a different story now because the stock, I called it like a champ. And the stock is, I said 173, went to 173. And now sitting here around 170. Okay? So, but that's how you got to do it. So, let's move on. Don't want to keep you guys all night. So here's excuse my French, this is a naked chart without any fancy clothes on, right? So here's your naked chart without any fancy clothes on. And the average trader will have no freaking idea what the hell's going on here. So let's put some nice clothes on it. And one of the clothes that we put on is, first of all, the daily. This is the daily chart of your S&P 500. So people who are not really bothered with day-to-day machinations of the market and the volatility, which is very hard not to do, this is kind of a mixed picture here. I can see multiple patterns in play. So this is what happened today. This was your downtrend line, which I had drawn 2 days ago. Each candle is 1 day. And I said this was a doji. And guess what happened? This downtrend line that was created because of this large, sell-off candle was exactly hit. You guys see that right there? And exactly hit, and boom, came down the market. This is what's happening right now. It's a mixed signal. We don't know. Can somebody just mute their mic, please? Okay. So either we are going to test the 2698. We just looked at it on the other chart, right? Let's be prepared for it. Can do this. If it breaks this, then we have this big, fat, powerful gap. I mean, it's actually not a gap. This is a buffer zone where the market basically did 3 long tails. Long tails. Candles. The more you look at candles, the more you'll understand it. No one taught me candles. Okay? Besides some of the few that my wife bought for the house. Fancy ones. But technical analysis candles are big time stuff. So there were multiple long tail candles, meaning shorts were covering and the real buyers were coming in. So if we do fall into this range, you will see lots of these little candles appearing. Okay? In the meantime, this is where we should hold around 2698 if we get there. That's roughly another 90 to 100 points on the Dow. Or the market says, you know what? Everyone's looking at this stuff, so we're going to bust and move the other way. Remember, nobody wants to pay you for your options. Nobody. because whoever you paying you for the options is a market maker who is on the opposing side. Do you guys understand that part? Is everyone there? Hello?
Yeah, I'm here. I'm here, Frank. I
No,
got
no,
it.
no. I just saw a little thing pop up saying experiencing degraded audio quality in your recording. So that's why I asked. Sorry. So does everyone understand that when it comes to options trading, or if you're short or long, but let's say about options, when you're buying a call or a put, somebody is selling it to you, correct?
Correct.
Okay. Everyone understand that? Nick, Nia, Sue?
Yeah.
Okay. So somebody is basically betting against you. So nobody wants to give you free money because you're right. So that's one of the reasons why markets do what they do. They complete patterns because they want to recover their money. A lot of the times, the big market makers are selling a covered call, which you are buying as a call. Got it? If you have 1,000 shares of let's say you have 1,000 shares of Facebook, a lot of money, $170,000, and you want to cover your downside, you might want to sell 100 calls of Facebook at 172. All right, so that just in case, and raise that money. Those 100 calls are sold to you and me. Do you understand what I'm saying? So the bottom line is, if does everyone understand that part, that when you're buying a call or a put, somebody is selling that to you and they're taking an opposing bet on what you're betting on. If you're betting that Tesla's going to fall $15, somebody's selling that to you, betting that Tesla will rise $15. Do you all understand the basic concept?
That's fine.
Yes? Okay, good, good. Basic concept. You don't have to get into the nitty gritty of it. So bottom line is, if the bigger the stocks are, the market makers are going to try to make sure that they create volatility to take you out of that. Say they don't pay you. And when it goes the other way in a big way, like Alta did, like Win did, like CMG did, Chipotle did, they get massive short squeezes and they're losing big money. And your options are going up 500%. The CMG 322.5, which was recommended as a spec play, went up from $2.47 to 16 today. 232 to 16. All right? 1-6. Sweet 16. Somebody lost a lot of money on that short. So anyway, so these long tails are where the shorts are covering. So this is either this happens and you're going to meet a big roadblock at around the 27.57 level, because that's where the big selling, as Sue correctly pointed out, the big sell candle appeared. So you got to play it accordingly. The markets are moving in increments of 100 to 200 points, and the volatility is intense. But looking at this chart, so far, it looks likely that given this minor drop, which is going to be very quick, guys, very quick, or this drop, which is also going to be very quick, they're going to suck up the supply and they're going to buy hard. And they're going to run the market. This pattern, in my opinion, up to the 2780, 2800, just the way I said it from down here, is going to get completed. What happens at this zone, I have no idea. Okay? But the markets, one way or the other, will get up there. Now, if everything goes wrong, and the Trump trade stuff, it really blows up in the face of everything, Bank of England does really stupid stuff. North Korea fires a missile and says, "See you later, Donald. I don't want to see your face," because they're both fat guys, right? So one fat guy said, "I don't have room for you in the in you know in the palace," and all these black swan events happen. Then we know, at least chart wise, what we need to do. We have to react quickly, because if it falls here, does not create these tails, then we are going to fall down here. That is going to be 600-700 points on the market. But we're not there yet. I'm just giving you a scenario. What can happen? Different things can happen. There's a lot of political risk in DC. This Cambridge Analytica stuff, I know about them very well, by the way. Okay? They did a real mess up job, and not only that, they got caught on tape. These proper English gentlemen with their stiff ties from Oxford and Cambridge, very smart individuals, bragging about how they can basically support one campaign or another, is not conducive to a healthy political dialogue. It bolstered the case for the enemies of President Trump, whatever political affiliation you're at, we're all Americans, to say, you know what? We knew that, this was happening. It's pretty frigging obvious that there was a lot of crap on social media on both sides. And now it's open. And Facebook is going to go nuts on these guys. And those guys are finished. Okay? Cambridge Analytica was used as a massive tool, and more importantly, they used the Republican GOP and the Trump team and sucked them into their vortex. And it's all on recording. What more can you say? The rest of the stuff with the girls chasing Trump and suing him, well, that's gonna, what you gonna say? Melania, already, hasn't, is been in a different bedroom for 4 years. All New Yorkers, we know that. She knows Trump cheated on her repeatedly. I don't know why the heck he did that. She's beautiful, but hey, that's what happens, I guess, right? So, moral of the story, not to deviate too much. Be faithful to your wife or your husband or your partner. Don't cheat. It's not worth it. Trust me, okay? It's pathetic stuff, but New Yorkers, we all know that. Clinton cheated. Kennedy cheated. They all cheated. Now Trump, all this is coming out. It's there. We know that. But anyway, so this is the scenario on the daily. Now let's look at it with a short-term technical picture. Then we'll look at a couple of stocks, which is the exciting stuff of the business, right? Another futures are up about 7.25 right now as we speak. That's why you're seeing this, right? ES volatility. Okay, so here's another chart which is drawn to perfection. Anyone can trade this chart. Anybody. Believe me, any of you guys can. Within a very high margin of profits. This is your what do you call it? Trading range, which I kept on, I was showing pre-market. And the market's basically back and forth in the trading range. Hit the trading range exactly at the bottom. These blue arrows weren't drawn after the fact. They were drawn before the fact. You guys know that. 27.12, bang, bang, bang. It's going to hit here. What's going to happen? Most probably it's going to pull back. Now, how far it pulls back, we don't know. Does it pull back all the way down here? Okay, at least we know. Stows are very important. They get overbought. Generally, the market pulls back. That's what it's been doing. Every time it's oversold, that's why the blue arrows are. You want to buy a couple of SPY or SPX calls. Every time. Here it slipped below. That's where you had the long tail reversals. The big arrows are not there just because I slipped and I said, okay, let me make this arrow fat. It means like that's a good, strong, buyable point, 2,700 right there. Okay? If it busts a move above that, which it tried to do today, guess where it hit? Just the way Sue correctly pointed out. The big sell-off point. The big sell-off point right there. So it actually completed the pattern, guys. Let me do this right. It actually completed the pattern. Watch. Staying within the trading range, and it actually completed the pattern. Now, some of you who might not be that adept at reading arrows, let me explain this to you real simple. Somebody might say, hey, you have a red arrow here, means that we should be selling at this level. Yes, but what if it goes above that? That means we're going to hit the full pattern completion, at least on an intermediate level, right here. That's the reason why I have this blue arrow, which means that if we're going to hit a sell zone here, a supply point here, but if it moves above that, then it's going to bust a move here. So that's the reason why I have this arrow. So that's it. So this chart can be used consistently. I look at it like a hawk, and it's already constructed for you guys. You don't have to do anything. This is your big trading range. That's why it's kind of shaded in light green. And if we go back and zoom out, and if we zoom out, this is what's going on, guys. Okay, this was that ultimate scary. It's still scary. Lows at that 2640 level. This is what we did. So what this is telling me, that the sell-off, in my opinion, overall, is not completely over. And I think this level of the sell-off will happen. Somebody step in and tell me. I've said this a few times. When do you think that's going to happen? The month April comes in mind. So somebody step up and tell me, because I know. April 1st. Why April 1st, Dano?
Oh,
Not April 1st. No, wrong answer.
tax selling.
Yeah, exactly. Tax selling. So it's going to be after the first week of April. Not April 1st. You're just off by a couple of days. Yes, exactly. Okay? And the way the markets work. So I'm guessing this will probably happen after the 6th of April. So mark that. 6th of April. Because the 15th is the 15th of April is a Sunday. So it's going to happen the week of it's going to happen between the 6th. Write this down somewhere. It's going to happen between the 6th and 11th. Between the 6th and 11th. Right before tax time. In the meantime, the powers that be, there's always a hidden. Remember, the market's completely manipulated, okay? It's always been like that. Life is manipulated. I mean, it's, big money always makes sure things happen. That's why it's called capitalism. People say, oh, they're all fleecing us. Like, who's they? You get really, really rich. You can fleece anybody you want. You want fleecing? Go to Asia, go to Africa, even parts of Europe. That's where real fleecing happens, all right? Here, at least we have a chance to make some money. So, and trust me, I know these things. So, the key is that in the meantime, the big money wants to make sure that the markets are somewhat elevated so you can make some money. Why? So you have some extra money to pay your taxes. Just the way it works, guys. All right? Just the way it works. So, in order for you to make some money, the market wants to go and test these levels. And if you're smart enough, you will trade the charts accordingly. And when I'm showing the charts, I'll say, okay, it's getting up there. I'm up on something. I'm not too excited. Let me take some money down. Now, is it possible that we go and test the 2800 level? Sure it is. That's one big pattern. You can see that clearly. You want to be an aggressive seller and a shorter at these levels. I don't care what else is going on. But in the meantime, I'm looking at it one step at a time. And one step at a time tells me that there is intermediate pattern symmetry at this level. possibly here. I'm not betting on it. And then we're going to fall hard in April. Now, earnings season starts off in April too, and I think earnings season are going to be pretty damn good. So after that big fallout, somewhere in this 2600 range, we have to be big buyers. Let's look at this is ES volatility. I'm going to look at one more one. I call it EX Rex crash. This is a perfect chart for people who want to trade actively. All right. This was your Friday, the monster jobs report rally. We are right here. This is similar to the first one that we saw. This was the zone that the market was basically hovering in before it fell apart. Now we are here. We need to breach this to get up there, which is going to be the mid stage of the pattern completion. This will be intermediate full pattern completion. You can see that clearly. Let's look at it, just always look at charts like in the form of pictures and geometric patterns, all right? Or we fall here and we move from here. So always have cash on the side to react to these situations. Unfortunately or fortunately, these things will happen very quickly, and you need to have your reaction time has to be quicker. Now, that's all about the markets. Everyone clear on this? Any quick questions anyone has on a few things that I tried to explain? Because they're pretty clear to me.
Nothing here, Frank.
Okay, sounds good. Now, last thing I'll tell you is that when this happened, by the way, we had a 400-point rally. Okay, humongous. Remember what I said in the middle of this webinar. Somebody who got short selling you the calls lost a lot of money. A lot of money. There's some institution who sold those calls on the SPX lost a tremendous amount of money when the jobs report came out. The market wasn't expecting it. We were positioned nicely, not crazy, but nicely prior to the jobs report based on my charts. And this was a field day, a big day. So at this point, that's why they have the green line here. That's your level. If the market crosses over that, then expect another big move up towards these levels. Okay? So, but also, this was the start of the monster job report rally. This is pretty much exactly where the market went today. And as Sue correctly pointed out, that was the big sell zone. You get what I'm saying? Look at markets in the form of charts and numbers. Forget about the rest of the world. They say. So if we get up here, this is a major resistance, the 2745 level where we got to today, 2740. If we break this, it's going to be a big short covering rally, and it's going to be very quick. It's not like scratching your head. Oh, we're going higher. It's just going to go. It's just going to go. So that's it. Now let's look at a couple of. Let's look at the chart, which is forming out to be fantastic. Chipotle, for example, which doesn't give two hoots whether the China tariffs or whether Trump's got another girlfriend or whatever. Okay, it doesn't give a hoot about it. Okay, it just wants to make the burritos better, and not that I really care about burritos, but they need to change their menu, if you ask me. Now, one of the news items that I put out there was they hired. I actually missed it yesterday, but we were still long the stock, and I told people to buy it. Everyone know who Yum Brands is? Anyone not know who Yum Brands is? YUM? Come on, we don't have all night. Say yes or no.
I do not know who that is.
Okay, Yum Brands is everything that you guys go out and eat. On a quick note, okay? Yum Brands owns. They're from Louisville, Kentucky. Okay. Yum Brands is formerly known as Tricon Global Restaurants. Is the biggest American fast food company ever. They own KFC, Pizza Hut, Taco Bell, Wing Street, more and more. Okay, this is what they own. You ready? Yum Brands. And now you learn something new. Yum Yum Yummy. All right. Yum Yum Yummy owns KFC, Pizza Hut, Taco Bell. I don't have no idea East Dawning. Food looks really good. Wing Street, you name it. Okay, and they own a whole bunch of stuff in Yum Asia in China. Guess who joined Chipotle yesterday? One of the big shots from Yum Brands. Now you tell me, they got the Taco Bell CEO on. Somebody please stop sweeping the floor while I'm doing my webinar. Thanks. Or wiping their nose. I mean, please put your mic on mute, please. Thanks a lot. All right, thank you. What do you call it? It just sounds really crazy on my side. Yum Brands is huge. Like my good friend Donald says, huge. Have any of you bought the huge books yet from Amazon? They're going to be collector's items. Buy a bunch of them. They're only like 12, 13, $7 right now. In 5 years' time, you're going to sell them for $1,000. Seriously, go to Amazon and type in Trump huge. Y-U-G-E. Buy these little books, cartoon books, all right? The biggest investment you'll make. So do it. So Yum Brands is huge. Okay, all kidding aside. And one of the big shots of Yum Brands joined Chipotle. So you got two power guys in there. You think they're just going to be sitting there eating bad burritos and looking for rats? Yes, they're going to do that first. And then they're going to change the whole structure of the company. Let's look at technicals. I've been saying this. This small candle here is 308 to 331. This is where it's going. The calls are great. You can roll them out every week because you don't know what every week brings, in the sense that they're in the middle of a major restructuring. Okay, I don't like giving stock pitches, but it's a fundamental story. This is a major restructuring of a major iconic brand that is loved by millions of people, just the way iPhone is loved by millions of people. Remember, they used to say Apple is dead, Samsung is going to take over, blah, 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 blah. Nah. It's a cult. Chipotle is a cult. And that cult, on even trades here, especially after this massive hammer reversal, that was where the Taco Bell CEO joins Chipotle. Billions of dollars, shorts just got creamed. The follow-up on that, and this is a monthly chart I'm showing you. So you gotta have patience. Big fat candle. So big fat candle's going to 353. It's not seriously. Don't want to trade the wild movements on the tech stocks and stuff? Fine. Sit with this stuff. This pattern, one way or the other, it's going to hit resistance, probably pull back a little bit, is going to get up here. It's going to happen. Technicals precede fundamentals. By the time they come up with a half-decent menu, okay, because their menu is kind of like, yeah, the same old stuff, good stuff, but same old stuff. By the time they put on some new makeup, change the staff wear from like they all wear black, like they're all like some funeral directors. So change them into a different thing. The takeout starts, they're starting the takeouts and stuff. The pilot testing. The stock's going to be at 500. What are you guys going to do? Just sit there and say, "Oh, wish I did that." And then, if it does this, it'll do this. So don't you want to be on the ride at least to 350? See how it reacts, and then the ride to 442? And earnings will drive the stock up in multiple amounts. Now, this doesn't mean, guys, as traders, that it's going to be up every day. So on the days that it's down a little bit, you got to revert back and look at the monthly chart. Did this candle turn blood red? Did it do a bearish engulfing like this? Then things are different. But as long as the monthly candles remain green, that means billions of dollars, far, far bigger than we'll ever put in, the hundreds and the thousands that we put in, right? Means it's going higher. Fantastic. Any questions? No? Okay, good. Because there are no questions on this chart. Is it a definite? There's no definite or guarantees in trading. Come on, guys. But it's high probability. That's what we're playing. We play probabilities, just like Dr. Jeffrey Steenbarger said on his thing. We play probabilities, not certainties. Because by the time it's certain, like Warren Buffett said, you pay a very high price for certainty. Did anyone ever hear that term? You pay a very high price for certainty. Means by the time it's all known, the stock's going to be here. That's the essence of, investing, I guess. So this is a good one. A very good one. Let's take a look at another one that everyone kind of jumps around too much. Oh my God, it's down a couple of bucks. Wynn. Steve Wynn is going to sell all his stock. Is that good or bad? I think it's great. He needs to be out. He built a massive, powerful empire. But then he slept with his maid. Well, and his wife is pissed off. You don't want his ex-wife is pissed off. That's like the most dangerous thing in the world that can happen. If you ever get your wife's pissed off and then your ex-wife pissed off, you're finished. At least in the business. He's going to have a great life. Right? So, Wynn is very powerful. Wynn is most probably going to test right here, 177.95. You can see that. Right? So these are short-term stuff. It is extremely oversold. Very easy to read, by the way, guys. This is a hourly chart right there. It is going to come and test this level. This was the level before it went berserk. If it falls into the gap, then you're going to be looking at 171. So you don't want to go too crazy. You want to see a reversal candle develop off this 178 level. And whatever happens with Wynn, it happens fast. You guys know that. So there you go. It's going to go to 185 just like that. So if you're not positioned right, you missed it. Stows are getting deep oversold. Last time it got this oversold right here, it bumped. So you always have to have a small position in it because you just don't know what the news is coming out. What are the bad news is going to come out on Wynn right now? That Steve Wynn, I don't want to make any bad jokes, and it's kind of stupid. So the point is that he's selling his shares, and he said it was announced today that he was selling on a systematic basis, so as not to destroy Wynn shares because he owns a lot. So take his shares from him while they're cheap. Real cheap is 170. Moderately cheap is 176 to 178. But I'll tell you one thing. The more he sells his stock, can somebody fill in and tell me what is going to happen with that stock? With the ownership of Wynn? Think like an investment banker. Somebody step up and tell me. Come on, guys. You guys are smart guys. As he unloads his position in Wynn, what does it allow the new Wynn to do?
Are they going to buy back or what?
No, Mike answered the right question. Takeover ownership. What does takeover ownership mean? Yeah, takeover. Yeah. Yeah, Mike and Dano are right. Wynn's assets are gold. Okay? Wynn Macau. In Macau. Wynn Vegas. Come on. Dano owns a mini casino in Vegas, just in case you guys didn't know. Oh, I'm just kidding, Dano. But yeah, he does. The guy who owns property in Vegas. Anybody who owns property in Vegas is a big shot. All right? So, point is, but Dano, own property in Vegas and, build a mini empire, but just stay away from the maids, all right? Just kidding. So anyway, yeah, somebody else is looking to buy assets of Wynn. And if Wynn's ownership decreases, he was always against selling the company. No one's going to buy Wynn lock, stock, and barrel. They're too big. But little assets of Wynn, they can sell. It's a big thing. It's a big catalyst. I don't want to get into it too much. That's how companies work. Let's take another stock, Alta Beauty. Alta Beauty went up a lot, right? Big move, huge day. So now it's pulling back a little bit. But look at the internals. This is not stochastic. This is the MACD, right? The MACD. The MACD is totally fine. So Alta, if you look at my arrow, is probably a good entry point at the 210 level. Because all it's doing right now is this. All it's doing right now, it created a cup. It's creating a handle. You see that? Now that handle needs to stay above the 207 level in order to remain a handle. Cup and a handle. But I think it is going to. And you're going to see this. It's going to happen. You just got to watch the charts a bit. Now you get a big move like that, obviously you're going to take some nice profits as long as you are positioned down here. It was a huge move after earnings, right? But the chart is fine. So far the chart is fine. If it breaks below the 207 level, then the 201 comes into play, but I doubt it. Oh, he highlighted Alta. Was it good or bad? Just curious. Because Kramer does have a lot of influence with a lot of retail traders. Mike? He loved it. Oh, okay. Okay, good. You see, these stocks that we are highlighting here are independent. Not independent, but less dependent on major market fluctuations. So you have a buffer zone. We already know what the Googles do and the Apples do. Apple just fell apart today. Like, for what? But then we can look at something like I have a lot of good charts here. So let's look at Caterpillar, for example. This is a great trading stock as well as a great industrial stock, right? So Caterpillar moves in moves of about $1 to $2 each of these candles, because this is a 15-minute chart. You can trade them. The calls are not that expensive. They're like $1.50, maybe $2. And and Caterpillar is in my a good beneficiary of the overall Dow Jones Industrial Average. Is after all a component of it. But just to give you just showing you, like, there's a gap. Stock went up, pulled back, moved up sharp with the market, then pulled back as the market pulled back today. Name a stock you guys want to see, because I have a lot of stocks here, but Square is another. Yeah, go ahead. Anyone?
Melly.
I'm sorry? Melly?
Yeah, Frank, Melly.
Okay, 1 second. Sure. I should have a Melly chart. You haven't looked at it. Okay. So here's Melly. And as you speak, and this is a daily chart of Melly. Melly is at a, I'd consider it a pretty damn good buy point right here, right? Because for different reasons. The simple way you look at it, number one, you got a very deep oversold condition. You got a stock that's now pulled back 60 points. Wow, I didn't even see this. 60 points from its highs. Looking at it from a technical standpoint, I would be a buyer of Melly right at these levels, because that's pretty much where major support is, and also kind of a breakout level. So if I want to broaden this out a little bit, from a technical standpoint, Melly is a screaming buy. Well, there is a candle, I mean a reversal candle here. Melly is a screaming buy somewhere between 355 and 346, and you know Melly and the net teas and companies like that, they move around $6-7, like boom, just like that, right? So given this chart, which was already drawn, because it traded Melly a couple of times before, as you all know, if you want to be very specific, you want to be a buyer somewhere around 355, 356. And if it slips because of the market at around 345, I'd be a buyer of Melly right here. And if you're looking to just scalp it for like 3, 4, 5 points, all you need is to buy pretty much at these levels, and then quick burp in the market, and you take it out. So yeah, Melly's good. Melly's good here. And what I would worry about if you were long and you're like, oh, why isn't it going higher, and you kept on holding on, is if it breaks this zone here. 347 break would bring Melly down to about 336 real fast. But aside from that, I think Melly's, let me just adjust this a little bit. Perfect. Wow, you called it right now. I like it. This is your downtrend line. Look what it did. It hit that. So it's got to hold this buffer. It's got to hold this buffer. FDX, yes. FDX, I have the chart on my, bear with me 1 second. This is another thing I want to bring to your attention, guys, all right? About options trading. I love trading options on BAC because they're cheap money. They're 20, 30 cents. They bump up frigging, 200%. You don't get killed because they're 20, 30 cents. Even if it goes down to 14 cents, you buy a bunch of them. This move alone on back was 200% plus. Just for the stock, for people who haven't traded back, Bank of America, from 31,670 to 32.40 is 200%. You go figure if you shouldn't be trading these lottos. These are the best lottos, one of the best lottos that I've ever traded. Now you gotta be somewhat quick on it, but here was 20 cents and they went to 55 cents. More than 55 cents. Yeah, 15 cents to 55 cents just on a 70-cent move on a stock. That, just so you understand the different types of options trading you can do. Don't have to always buy like $6, $7 options and stuff like that. Okay, does everyone get that? So BAC is something that should always be on your radar. You can buy 10 contracts at 30 cents. That's $300. Buy 20 contracts at 30 cents. Bumps up to 60 cents. You just doubled your money without sweating it out, because God forbid something really bad happens. You lost $600. You didn't lose $6,000. Right? So back is serious. And if you want to buy size, you can buy 100 contracts, whatever you want to do. FDX. FDX was right there. 1 second. Now the thing with FDX, you have to remember one thing here. It's kind of treated as an industrial transport stock, right? Obviously it's transportation. So it's going to move with what the Dow Jones is doing. FDX was a great earnings play. And to be honest with you, the biggest risk to FDX is what? FedEx is what? What's the biggest risk to FedEx? Come on, somebody step up and tell me, please.
Global trouble.
My what?
Troubles.
My whole life is a trouble. I mean, what does that mean? What company is
Man,
what company is the biggest uh, uh, threat to FDX, to FedEx?
UPS, Amazon, or Google.
Amazon. Amazon. You know, Amazon's buying their own fleet, guys. FDX is a good like short term trading stocks. I don't know if I want to bet on FDX longer term because Amazon is already in the works of buying like frigging 70 Boeings. All right, this guy Bezos is really something. Cuban orphan. And look what he's doing. He's changing. Every industry goes and he changes. FDX has a major threat to it, and that's Amazon. If you look at FDX on a weekly chart, despite the move up, look at this candle. That's another way you look at charts too. What does this candle tell you? 10 million shares were sold of FedEx despite strong earnings last night. This is an inverted hammer. Am I saying it's going to completely collapse? No. But I am saying that it's very possible, and it comes down to 242. Now, that's a weekly chart. It's all sellers. Look at that. Let's look at a daily chart. No bueno. No good. This is a Chinese firecracker, inverted hammer, falling on your head. And you're not wearing a helmet. So you're going to get a big burn on top of your scalp, guys. Okay? It was a good trade. You got to look at the charts. And you got to, it doesn't mean it can't turn around. But this hammer reversal, partly due to the market doing what it's doing. They sold a lot of big industrial stocks. Is telling me that the stock most probably will bounce off 247, if not 246. This is what I don't like. Earnings, good earnings play, no question about it. Look at the volume. They were all sellers, 4.8 million shares. Now, you can spin this around a different way. Every time the volume has gotten up to this level here, these volume bars, when they're this big, what are they known as? What are they known as? What's the term? What's the term when the volume's that big and the stock falls? Yes, thank you, Nia. Capitulation selling, pure panic. Capitulation sellings generally lead to a reversal. And the 50-day moving average is 253.77. So, on a positive spin, it looks like the sellers said they just basically dumped. Some hedge funds basically said, okay, we got a little move up here now that we dump. Because the stock went from 257 and closed at 252. For hedge funds, that's a lot of money because they're trading in 100,000 block trades. So this could lead to a turnaround. We shall see. If you want to be a trader on the stock, you want to look at the 1 hour chart. And the 1 hour chart is showing you this. 247, move up. We'll keep an eye on it. Google. My opinion, Google is going to rip higher big time. Because Google's head of security was on yesterday. He's a German guy. He should know about security. And he was brilliant. This is Google's trading chart. Okay? This is the 1 hour chart on Google. Zigzag, zigzag. Okay? Google went up nicely. 1108. Pulled back because of the market. 1094. Google has been maligned by what happened with Facebook and Cambridge Analytica. Okay? Google has nothing to do with it. The biggest risk to these social media companies right now is that if stupid Congress and the Senate come in hard and put regulations on data content, In capitalism, we believe that free markets dictate that companies fix their own problems. Socialism and communism believe that governments should intervene to fix the problems of companies. Sorry, guys. I don't believe in that theory. Okay? Whenever governments intervene, a bunch of morons sitting out there who have no idea about the high tech, these guys are brains, okay? And they try to regulate hard by putting down stupid rules, which these companies themselves can regulate on their own. You are intervening in the process of the free hand of a free market. Okay, you don't want to meddle with that. That's one of the reasons why hardcore conservatives and supply siders do not like the Trump team moving into certain industries and telling them what to do. Because we are not communists, we are not socialists. We let our companies, within certain bounds, fix their own problems. Because that's what the whole essence of socialism is, right? The government intervenes in free markets and private companies and tell them what to do. Now, it's very populist. It buys votes. Yes, it's great. You're telling a company what to do. But overall, not good. So if the government comes in too hard and starts putting hardcore regulation, the Europeans are all socialists anyway. Dead serious. Trust me. Been to Europe way too many times. And like I said, the Europeans are all socialists and the Russians are basically all mafia. I should know that given the fact that some of my best friends are Russian. Okay? And trust me, I know. They are literally borderline mafia, including Putin. All right? He is mafia. It doesn't matter. Legalized mafia. So the point remains that when government comes in, no good. So if government regulates too much, unfortunately, the Googles and the Facebooks will get hit more. So that's the biggest risk. Aside from that, from a technical standpoint, let's look at a daily. The daily chart in Google right now is showing, and this is aside from all that news, a daily chart is showing massive oversold conditions right here. This is definitely massive, okay? The RSI, based on the full stochastics, is almost at 12. So these are the lines that I'm trying to trade in. 1082, 1090. This is what it tried to. This is the downtrend line that it tried to break out of today, right there. This is a pure chart play, and it went up there. It's still a green doji. That's fine. Looks like an inverted hammer. It's still green. So Google can be traded in increments of 10 or 20 bucks. This is not at this point, given the uncertainty with with all the hearings and everything that's going to happen, with all these content companies like Google, which collect user content. Obviously, they do. Anyone goes to Facebook and say Facebook doesn't know what you're doing. You're writing your whole life in Facebook. I always wondered why everyone wants to put up their whole life's pictures on a social media site. Like, great, I have a Facebook account. I think I have a picture of my son when he was young walking the dogs. I mean, it's like, and everything's private because I don't do social media. Well, if more people were like me, then Mark Zuckerberg would be making $2,000 a year. He'd be broke, right? But people love to share and, I did this, I went to this, and fine. So you don't want your data to be stolen if it's worth it, and then for political purposes, I hate Clinton, I hate Trump, I hate my dog, of course some other company like Cambridge Analytica and Russian trolls and stuff are going to mine that data. It's a given. I mean, people are so stupid. I'm dead serious. They think that their data is all secure. What's secure? Once you lay your life bare open on a social media, anybody will know what you're doing, and artificial intelligence bots are going to find out what you like. I wake up in the middle of the night and I eat cookies. Oh, okay. So you're going to get an ad for Oreo cookies. All right? It's not instant stardom. People just love sharing. That's fine. That's how Facebook started. So bottom line is that's the biggest risk. So Google is right now, and I'm very bullish Google, by the way. And Facebook, I'm very bullish too. I call Facebook like a champ. And you guys know the chart, which I'm going to show in a second. Okay? Their businesses are worldwide. They're huge. Short-term risk is the regulation part. But aside from that, you can trade it. You can trade it. and you can only trade it off the 15-minute charts, trading bands, for example, or you can trade it off the 1-hour charts. And but there is risk, and the risk is, believe it or not, if things fall apart, you got 1082, because they all move like $10-12 a piece, right? 1072 and then 1051. But so far, very oversold. You can trade it as long as you're quick enough to do it. Let's take a quick look at Facebook because that's what's driving the NASDAQ at this point. Facebook was a powerful play on the calls. The calls went from $1.75 to $5 and change. Decent money. This is what I was looking at. Big hammer reversal on huge green volume. What does that tell you? Simple English. Buyers and short covering. Next day, which was today, big fat candle. I was watching the 15-minute. I was watching the 1-hour. And for active traders, trade off these charts. This was Wednesday. I saw the lows here, 163. Start to see this candle develop in a huge way. I knew they were going to take this higher. If you want to trade it off on a swing basis, here's your downtrend line, 175.12. Stock went through exactly to where I had drawn this line. And the way I drew this line, just so you guys know how to draw charts too, is simply look at on the 2nd of March. That was your low. I drew the line based on that, and guess what the stock hit? Exactly there. Technical, tactical magic with no tricks of mine, just drawing lines, guys. This was a major inflection point. Guess what it did? It hit there, pull back. Big fat doji, that means billions of dollars are still sitting inside Facebook. If it busts a move, you're going to see 177.14. 50-day moving average is at 181. Big gap fill here, which I believe will get filled. And that's all I got to say. All right, guys, let me run. Have a great evening. Thank you for attending. Great questions. I wish you all well. Like I always say, like a broken record, right? We need great referrals. We need more new blood to come into Clueless A trading. Always about tactical trading. Fundamentals are always going to be there, but technicals will always precede fundamentals. Get used to this crazy volatility. I do not like volatility. I want to make Clueless A trading service as simple as possible, and I wish I could control the markets. I don't. Okay? So get used to the volatility, but I've explained all the scenarios to you guys, and we're going to be fine. That's all I got to say. Have a great evening. God bless you all.